Welcome to Financial Services What's Up?
This podcast brings together experts from the financial service world to figure out what financial market participants could and should be doing to embrace the biggest challenges and opportunities of the financial sector.
I'm Björn Ebert, the financial service leader at PwC Luxembourg.
And I'm Sandra Paulis, an asset management partner at PwC here in Luxembourg, and very keen to discuss our industry together. Welcome back to Financial Services What's Up podcast, where we unravel the complexities and opportunities of the financial services sector in Luxembourg and beyond. And a warm welcome also to Björn Ebert.
Thank you, Sandra. Really great to be back, and it was a great summertime. I hope for you too, Sandra.
Yeah, I had an amazing time. The sun was good, and I'm still looking forward that it's coming back.
Great. So I'm really looking forward to the episode and looking forward to our guests today.
Today, we have the honor of hosting Claude Marx, the Director General of the CSSF, which is the Commission de Surveillance du Secteur Financier, being a public institution which supervises the professionals and products of the Luxembourg financial sector. Welcome, Claude.
Good afternoon.
In addition, we have Michael Weis, a partner colleague, and Michael is our anti-financial crime leader who recently led an EMEA-wide AML study. So he will be our AML specialist today. Welcome, Michael.
Hello, thank you.
So we will be discussing a range of topics, including the current regulatory landscape, fostering an eye from the European Union, but at much more to have the inside view from our regulators. So stay tuned for an insightful and engaging discussion. So, dear Claude, when we are looking at the regulatory horizon that is coming up, the easiest question would be, what's up? So what would be the elements that are relevant for Luxembourg of the financial sector, and what are the elements that Luxembourg should take into consideration?
Well, I think the first thing to say is that it's never boring and it's never calm in terms of upcoming new regulation. I won't go into detailed regulations here on the banking side, on the fund side. I think there are many specialist regulations coming up, but I think the big themes that we see now is, digitalisation, green finance, AML. Those remain hot topics. And when you look at the geopolitical situation also, I think then it becomes very relevant to think about topics like operational resilience. That is
DORA.
one of the hot topics now. DORA, yes, exactly.
What would be the elements, or how do you look actually at DORA? Do you see that as a beneficial element for Luxembourg, or rather a challenge, a threat for Luxembourg? What's your view on that one?
I think in general it's good to have regulation, but not all regulation is good. I think DORA is one of the good ones. I think DORA forces people to review their operational resilience in a structured way along four axes. And I think, companies have done now their gap analysis. Largely, and they have concluded that they have weaknesses still to address in the near future. But I think that's beneficial. That's beneficial also, as I said, in the current context.
That actually the bit of homework is being done around that. So we mentioned DORA. Is there another one that is coming to your mind? Because there are plenty, right? So just
sure, but I think that a new topic is going to be MiCA. I think crypto assets, the question here is not whether you like crypto assets or you don't like them or you find them good or not good. I think they are there. And so we somehow have to cope with them. And I think to put some structure around people offering crypto products is certainly useful. It also provides comfort to those wanting to invest in these products to deal with people that are authorized and supervised. And this is the big news in this space. As you know, so far we had registration of VASPs, and we will be moving to a system where so-called crypto asset service providers, or CASPs, are going to be authorized and are going to be supervised. Now, having said that, I think that there will remain one weakness in this spot, which is companies offering financial products through digital channels channels, including crypto products from outside of the European Union, sometimes from places even unknown, to retail customers. Obviously, the regulation does not capture those.
So basically the new regulation is actually adding some positive advantages around it, but the problem of the European Union being an environment where you can regulate it, but everything that is coming from outside currently, it's not covered actually by this.
And this also shows, a gap that we have today. We reason in terms of, traditional channels. We reason in terms of traditional players. And the reality is that especially young people, they get their information, but they also get their products through digital channels. They get it through YouTube, they get it through TikTok, they get it through Instagram, and they are being influenced by so-called influencers or finfluencers. And I think there is still a mismatch between regulation and also efforts that are being done on the financial education side, which is more on the classical side, and the end users or targets of serious and sometimes not so serious products that come through the channels that I have just mentioned. So in the future, it is going to be important to also take this into account and possibly in a mutualized fashion identify those offering products in an illegal or dangerous fashion through social media and otherwise, and shut them down, because from a technological point of view, this is very possible. And it would be a pity to do that 27 times all over Europe, because there is only one World Wide Web and there's only one TikTok. And so I think here is an area where we could act in a common way or in a mutualized way.
So clearly to the benefits of the European Union. So you mentioned DORA, you mentioned MiCA. Are there any other hot topics that you would see in the horizon?
Sure, I think that the whole area of green finance is certainly something that was launched in a big fashion in 2020 by the former Commission. And I think we often lose sight of the objective of that particular piece of regulation, which is to solve an important problem, if not the most important problem for society, which is global warming, and keeping global warming within 1.5 or 2 degrees of pre-industrial levels. And the Paris Agreement and the need for private financing in addition to public financing to solve the problem. So we should never forget that framework or that objective. Having said that, it is a bit sad to see that some of the regulation that was launched in a very quick way was possibly not well thought through and now needs to be reformed.
Yeah, I think you touched a very well point, Claude, on that one. I think there's also kind of a revision now of the SFDR. And there is also a lot of talks about greenwashing since a couple of years. I think there was a kind of definition now by the ESAs issued. What's your take on that, on greenwashing and on the certain dynamic we see on the regulation for the moment?
Yeah, I think there are two pillars here. That is the taxonomy and SFDR, the product classification. I think that the current system, the SFDR, which has classified products into Article 6, Article 8, Article 9, is hard to understand for professionals. There's still a lot of areas that are not clear. It has led to a lot of confusion. It has led to a lot of reclassifications. There's a huge cost associated with this, but it's also a matter of trust. And ultimately, this confusion can result in a loss of trust. And when we have a loss of trust, it will take time and effort, and we will lose precious time to achieve our end objective. So I think it is urgent to reform this system. The Commission has recognized, has done a call also for input from various stakeholders. and it's important to reform the system. In my view, we should be moving to a labeling system that is clearly understood by both the professionals and the market, and that will restore trust into the whole system. You also mentioned the important area of greenwashing, and that is again a matter of trust. That's where it comes together. I think here, we need to make sure that people are not being abused by products that have a green wrapping, but where inside of the product there is nothing green. And this is clearly a risk, and some of it has materialized. And so the ESAs have embarked on the mission to write a report on greenwashing that was published before the summer. And this is an important piece of work. It is a very good outcome. The work that was done, I must say, was very high quality work. And there are now some measures that the national competent authorities are asked to do. There's also now a common definition of what is greenwashing, which is absolutely important to have. And we should really work on this. There are also specific pieces on specific topics. We have guidelines from ESMA now on fund names, and it is just important that actors take this seriously in order to avoid greenwashing.
So it's actually a step towards more credibility, more reliability about the information that we are receiving.
I think, Sandra, also important what Claude mentioned before is the part of the education. We have to educate all the investors on that. I think there's a way to go, and we need more education in the whole financial system. And I guess, Sandra, in that respect, I mean, another point I would like to address is if you talk about the Capital Markets Union, is also a lot of talks about regulatory centralization of financial regulators across the Europe. And I would be interested to get your view, Claude, on that dimension.
The first thing to note for Luxembourg is that Luxembourg is very much in favor of strengthening the Capital Markets Union. And that is very logical because there's less than 700,000 people living in Luxembourg. So the clients, the consumers, are clearly not here. Luxembourg has lived for decades off a single market and will continue, hopefully, to live for decades of a strong single market. Cross-border selling is a very important feature. And I think we have managed to have the expertise in Luxembourg and also to have the substance in Luxembourg to be able to work in a very solid way across the whole of the European Union. And there are huge opportunities there because, as we know, compared to Asia, compared to America, people are underinvested in the real economy. They are underinvested in investment funds. And so if we bring it to the level of Asia or the Americas, there are huge opportunities there to develop Luxembourg even further. Now, why don't we have a strong Capital Markets Union today? I think we have very good pieces of work that have been published by Enrico Letta, that have been published by Draghi, by Noyer. And there are various root causes that have been identified there. I think key is going to be regulatory convergence, having a single rule book. And I very much welcome, for instance, the methodology now adopted by the European Union to work by way of regulation that is directly applicable and in the same way in all 27 member states, as opposed to the previous system to have directives that needs to be transposed in 27 countries in sometimes different ways, which makes it horribly difficult for players acting cross-border to sell their products, to structure their products, to do their controlling, because it is difficult to apply 27 different systems. So from that perspective, we are very much in favor of strengthening the single market, having convergent rules, and getting rid of divergent applications of rules. Now, you touched upon centralization of supervision. I think here we need to be mindful of what problem are we trying to solve? Are we trying to solve a problem? I don't believe that the absence of a single regulator has caused any damage to the development of the Capital Markets Union. At least nobody has shown this so far. We are in favor of centralization where it makes sense. And the perfect example of that is the banking union, where we have a single supervisor for the 112 or so largest European banking groups out of Frankfurt, out of the European Central Bank. We had a problem. The problem was that the failure of or problems in one given large banking group could spill over, could create a systemic risk. And we needed to address this systemic risk, as we have seen, for instance, in 2007, 2008 with the financial crisis. And the response, the banking union with 3 pillars, one being central supervision and authorization of banks, was a good answer, and it has worked. And we have seen that, for instance, in extreme stress situations like the COVID crisis at the beginning of 2020, or the supply chain crisis triggered by both COVID and then the Russian invasion of Ukraine and the subsequent oil and gas shortage and supply shortage, we have been able to really well withstand those crises. We also had last year the failure, by the way, of a GSIB, so one of the 30 largest banks in the world. And again, if you look at it from a European perspective, there has not been really a spillover, and I think that's also thanks to the system that was put in place. But when it comes to financial markets at large, with thousands of different savings products, investment products all over Europe that work by regional specificities, by cultural differences, by language differences, I don't see how that could be supervised in a central way unless you create a monster with thousands or tens of thousands of staff that understand all these specificities and that understand the language and that could then work from the center. But then it also raises a question of efficiency and a question of cost.
Mm-hmm. So convergence to a certain extent, but thinking about actually where it makes sense. Now we are going back to another important regulation, which is AML, KYC, a topic that is with us for many, many years. So there's the EU AML package, and Michael, you actually conducted a survey at EMEA level where you were asking the market participants about what their view is on a certain number of elements. And what would be the highlights that you would like to share with us?
Well, we are back to the washing business to some extent. We had greenwashing, now it's laundering, money laundering. And indeed, when we did this study, what was surprising and not expected at that level at least, but it repeats a bit some of the messages of Claude, is that the respondents to the study have been very skeptical about the regulations and in particular the EU AML package coming, where also the Luxembourgish participants were very skeptical, that about 50% were seeing it as not helpful regulation. There's a lot of uncertainty in the market, and it's true to be told that more clarity and consistency is needed, and this is a key objective of the AML package. Now, a lot of detailed guidance from the AMLA is still to be issued, so we have to wait for that to come.
50% is a lot, huh? If half of the market in Luxembourg think that this is not useful, what could be the elements around that? Claude, you have an idea on that one, or what would be your view?
I think it's impossible to understand, this number, and I think that this has to do with a more general fatigue of new regulation. I don't think that the respondents have fully thought it through, and I also don't think that the respondents actually know what the AML package would do and how AMLA would work for them. It's just too early. But if I go back to the earlier point, today we are faced with a situation that sellers of products cross-border in Europe have to deal with 27 different laws implementing the 6 AML directives in different patterns with different administrative practices behind that, which is a nightmare. And actually replacing all that system by a new system where you have one regulation that is directly applicable in all jurisdictions, of course supplemented by regulatory technical standards and implementing technical standards that also come from the center. And that gives you a single rule book in this area, which will make working in Europe much easier as it used to be in this particular area. It should be seen as an advantage and not as yet one more piece of regulation. And by the way, the AML package will replace the existing regulation and will not be put on top of the existing regulation as it is often the case. So I think here you should ask the question again in 1 or 2 years' time when we come closer to the working of this actually, and when people will have had a chance to actually see what it means for them and how it works. I think we should ask the question again. We will probably have a different kind of result.
Yeah, and to your point, indeed, there is the big call for harmonization, which is supposed to be addressed there.
Yeah, you mentioned the AMLA quickly. It's true that since quite some time, I didn't hear any recent news on that one.
Well, it is, again, it is very early in the day. I think AMLA is supposed to start working only in 3 years' time. But it is being built now. So first staff is being hired. First technical standards are being defined. First meetings are going to be held shortly of the governing bodies of AMLA, and working groups are going to be created. So it is starting. It is starting right now. Luxembourg has always viewed this as a positive development, and we will contribute to AMLA as we are contributing today to the centralized AML handling that's being done at EBA level in Frankfurt. We will contribute in the same way to AMLA.
Okay, happy to hear that it's starting, that it's actually coming, and that concretely already one person is here in Luxembourg. Another element that actually struck my attention was about technology. And in the survey, it was indicated that only 30% of Luxembourg respondents have implemented cloud solutions. That's really low.
That's really pretty much at the bottom of the study. That was a concerning result, I must say, because that indeed has also some mid or long-term implications when it stays at that low level. And one of the reasons that was identified is that the processes and the settings in organizations are not ready to plug in easily new technology. And in particular, it seemed to be a challenge in the fund industry, even more than in the banking industry. So there is a different level of maturity, apparently, in the market that still needs to be addressed.
Yeah. Maybe also some legacy system where it's more difficult to connect it.
Legacy systems are a big problem. The second element, which is interesting, is the people element. Because in order to leverage tech, you need to have the right people that are trilingual, that speak technology, speak compliance, and speak business. So we need different type of languages nowadays.
Mm-hmm. Yeah. I think that the CSSF has always been technologically neutral, so to say. So we don't favor this technology or that technology or technology in general. Having said that, the CSSF has always also had the position to inform the market how we view new technology. And when it comes to cloud computing, as early as 2017, we issued the first circular letters on cloud computing, where we gave clear guidance to the market as to how they could use cloud computing in front services, in back office services, in middle office services, how they could use private clouds, public clouds, hybrid clouds. And we were the first country actually to do that in Europe. And that has always been the position of the CSSF, to give guidance to the market, which also gives comfort to the market that they can indeed use this technology. And I'm surprised to see and hear even today people who ask themselves the question, am I allowed to use, for instance, cloud solutions? And very soon, if they don't use cloud solutions, they will die, because there will only be cloud solutions in certain areas. Having said that, we don't need to forget that we are in a country where very often we have not standalone companies, but we have companies that are part of groups. And sometimes the reluctance to use cloud solutions also come from the group. But I think we have all to gain to use technological solutions, be it cloud solutions, but also be it AI, where, by the way, the CSSF issued a white book on AI in 2018, which sounds like Stone Age in technology, but where we explained the advantages, the disadvantages, the risks, and the points to be considered when using AI. And the idea is the same: give guidance to the market to use technology in a safe way. But I am surprised myself, I must say, that I read the results and how shy companies are to adopt technological solutions, especially in the area of AML prevention, because it is very efficient to use it. There are very mature solutions available on the market, and there have been for many years. The CSSF gives guidance on how to use these systems, and it is a good way also to tackle the cost of compliance, because by using technology, it is a good way to control cost in your organization. And, but then you touched upon also a point that is very interesting and very important. Do people have the full understanding of how technology works and how it could be used? And I think there, when you dig deeper into that point that was highlighted in your survey in a very prominent way, you find that within the decision-making bodies, so the boards, the C-suites, you are lacking desperately expertise in new technology. And I think going forward, proper governance will also mean having people who understand technology, both on the board and on the executive suite. That is going to be a must.
I absolutely agree to that. I think that's, as you said, absolutely a must. And you touched on my favorite topic, which is Gen AI. And as we said before, cloud is the enabler also for Gen AI. And I think that was also a bit the topic in the Draghi report, which was issued 4 weeks ago on competitiveness for Europe, but also for Luxembourg. And as you, I think, rightly said, cost of doing business could go down by Gen AI. We need to increase our productivity to have some gains there. So I see it really positive, the Gen AI trend, and we see a lot of use cases in our Gen AI business center. But as you are here today, some people might say there's Gen AI on the horizon, there is some fear around it, so there is the ask for more regulation, knowing that we have the AI Act already a front of our door. But what's your view on that? Do we need more regulation, or it's fine like that?
I would be very cautious to recommend additional regulation in this area. First of all, as of today, we don't have a clear picture as to what AI systems are actually being used by financial market players and how they are used and how the risks that they pose, and there are risks with AI, there are hallucination risks, there are manipulation risks, there are many risks, how these risks are addressed. And I would even challenge this by saying, why would we assume that those risks are not properly addressed? So I think the first step here would be to have a much better understanding than the one that we have today on who is using what and how. And then if we came to the conclusion that there are risks that need to be addressed specifically with additional regulation, it should not be EU regulation, but it should then be international regulation, for instance, at the level of the Basel Committee, of the FSB, of IOSCO. And it should definitely comprise the United States, because today all mass-used Gen AI systems are American. Tomorrow they will be American, Indian, Chinese, and so on. Hopefully also European, maybe. So if in Europe we again rushed to be the world champion and have the best regulation in the world of AI for finance, there is a clear risk that we would build Fortress Europe around this, and we would cut ourselves off the use of the tools that are enablers of being more efficient, of delivering better performance, of controlling cost and risk in a better way. And so I would really caution there to rush forward.
That's really good conclusion, that we actually don't forget the European competitiveness in the world, that we keep that also at the forefront of any new regulation, preference, a regulation and not a directive that is coming into play. We are coming to a close of the podcast, and at the end we have the tradition of asking our guests whether they have a number that strike you because you have heard it and it was something that made you think and reflect. What would be your number, Claude?
My number would be 58%. And where does that number come from? Last year, the OECD did a big study in terms of financial literacy in many countries, more than 30 countries. And for Luxembourg, that participated in this OECD study, the result was that 58% only of young people between 18 and 29 were financially literate. And that is a very worrying number. It's a worrying number if we think about avoiding over-indebtedness, but it's also a worrying number when it comes to investing in green finance and when it comes to investing in the real economy, so capital markets union. So I think a big effort should be done, especially on young people, to make them much more financially literate.
And all of us, dear listeners, my dear people here around me, I think can contribute a little part to that financial education so that we can change that for the future. I would like to thank you very much for being with us today.
My pleasure.
Thank you, Michael, Björn, my pleasure.
Thank you, Sandra.
And then I wish you an excellent day.
Thank you.